All right, how's everyone doing? This is Hala Pablo. Thanks for tuning in. Let's look at Bitcoin. It's been a while since we've done Bitcoin. I'm still working on getting a fractal that's reliable. So far, no dice. So, but we're going to go off of a regression trend that I've done. So far, I have the macro and the micro that we've been using. Here is on the left is the daily, and the 4 hour is on the right. This is a logarithmic on the left. And so we have basically this channel, these basic two systems here. I've subdivided them into Wyckoff ranges with their own buying climax, automatic rallies, secondary tests, and signs of weakness. Here's the buying climax for the second. Well, we don't know yet if this is going to be a reaccumulation or if this is actually a distribution range. I'm kind of thinking it's a reaccumulation. Automatic rally, secondary test, sign of weakness. So here are the repeating patterns that you see. First, we have the top here. We draw these range. I guess that would be the range resistance, and then the range support from the automatic rally. And this delineates the trading range, and secondary test comes up and retests the range resistance, or TRR, as I like to call it. And then at the end, at the latter half of both ranges, we come down to see these conspicuous double bottom patterns here. You see this one here and this one here, where the signs of weakness is mitigated with the spring, or with the terminal shakeout. And then from there it pumps up through the anchored VWAP. On both of these, I anchored the VWAP to the buying climax area, or rather the preliminary supply. If you count this area here, right beneath the AR, that's where I anchored the VWAP, or the ICE, to both of these systems. Both of these systems exist within the rising channel. And so here, where the price action marked up through the range resistance, or TRR, we have where it crosses up through the ICE here. The bias was decidedly bullish. Switched from bearish to bullish after the sign of weakness. We think it's going to go down. But then on the macro trend support line, we have the bounces each time, and that's where the mitigations are of the double bottoms along the macro trend support of this rising channel, this regression trend. And then I have the mid range here, the mid channel, and that is where I contend where we currently sit. This is the congruent area of this area here that we had back in October of 24, and then we had the markup. I actually think this thing could quite possibly continue to mark up to the 618 Fibonacci. Now, the green circles here, this big green circle is the 618 from the white oval here. So that's a 618 fib. And this here is a 618 from this oval here. I went ahead and did the Fibonacci extensions. So keeping in that same pattern, the 618 from this area here, from this double bottom of this current range where we are, you see that we're right now retesting the TRR, or the range resistance. If this marks up from here, we can expect another 618 Fibonacci extension, and that would bring it up to this area around $130,000, somewhere around there. Hypothetically, we could mark up to, if this thing continues to mark up. And so we see here on the micro, on the 4 hour, all this is this here, obviously. And this is that diamond that we came out of back in December, this markdown. Remember, we rode this down. And then we had this, it looks like a triple bottom here. So that is this. And then from here, we bounced off the macro trend resistance and marked up. And so this is around the area where the fractal failed, the fractal that we'd been going off of for several months failed. And so we had the markup from here. And so now what we're looking at right now, the litmus test is going to be this TRR range here. Yeah, let's do it without all that. So that's this here, and we want to see, remove, if we're going to establish support at this area. So this is kind of looking like it could be a top, right? It's like, you know, we got that, this is that distinct, what I call the Christmas tree pattern, right? You've got the accumulation, reaccumulation, reaccumulation, distribution with the top here. And then from here it marks down. Let's see if I can get a pen so I can kind of show you what I'm talking about. I think this is the, yeah. So this would do this and then come down. So it's like a head and shoulders kind of, and then come back down to the range support area somewhere around here. That would bring it. That would mark down. That would bring it back down to the macro trend resistance area, back around the 93,000, somewhere around there. And then if we have another, if it goes, if we have throw over beyond the macro trend support line, then that could bring us back down to this previous low area where we had the double bottom somewhere here. So the double bottoms, this is a double bottom pattern. We have both double bottoms clearly delineated on this. What happens is usually the neckline gets retested. Now the neckline is right here where the ice is. We've already passed through the neckline, as you can see on the macro. And let me get rid of this and bring it down. That would be somewhere like here. The neckline somewhere like here, as we saw. That's this line here. This is the neckline, and this is the trend line that comes down the macro markdown from here. So that would be this, but we've already crossed through the ice. And that was this. That was the break of the ice. And so now we've marked up past the, this is an up thrust, or depending on what happens, if we mark down, if this doesn't hold and it becomes a head and shoulders, and this will prove to be the UTAD, the up thrust after distribution, as we come down to retest these, first is 0.5 Fibonacci mid-range, and then the trends, the range support or TRS trading range support, which again would be around 90,000. So it remains to be seen. We're watching, we're looking. In the meantime, we're swinging some of the alts. I don't know if you watched the last 3 or 4 videos that I've done. Averaged about 20 to 30% on each alt. We swung Zora, Forta, and there was another one, Enzyme, MLN, right? Yeah, Enzyme. So, and then I have several others that are in trading patterns, waiting to go. Wayfinder is one, Biconomy is another, and Barachain is another. I think I'm in Magic. Dima. So we're looking at those as soon as those pop off. And certainly if this holds, if this test holds and we get a bounce off here, and it does kind of like what it did at this prior range back in November when we had this Trump pump, if we pump up from here, then we could be looking at the 130,000. We can expect some of the alts to also pick up momentum and kick up there. Also begin kicking up dust as well. So we dig into these positions when we're down. And, Bitcoin, last time I checked, Bitcoin dominance is decreasing and the altcoin dominance is building up, or the total 3 looks like it's getting stronger. So anyway, I'm gonna leave you at that. Hopefully you got something out of this video. Like, subscribe, check out our trading group. If you're into swing trading right now, we're kind of cooling off a little bit on Bitcoin till we wait and see what happens at this resistance line as it's being retested. So until we get any conclusive action here, we're going to focus on the alts, because again, the alts is where I make where I really make my money. So this is when I begin to get active and putting my preliminaries on the in the Discord trading group. So if that's something you're interested in, by all means, check us out for a few months. I keep it extremely affordable. It's not a signal group. I just show you what I'm doing. I show you where I'm getting in, my preliminary points, and then I give you the Fibonacci extensions of where I'm expecting to get out, usually between the 1.272 and the 1.618 Fibonacci extension levels, somewhere in there. Oftentimes it goes up much higher, but that's all right. I'm not greedy. It's not all about the money. It's just the thrill of making a good trade. 20 to 30% on the core that I put in, anywhere between 3 to 5 G's. That's plenty for me. I do about half a dozen a week when altcoin season is pumping. So you do the math. It could be pretty juicy without inheriting all that risk that comes along where you risk overstaying your welcome, and then the thing drops and you're in it and you lose all your gains. So I like to get out of the casino holding the money bags, and being able to trade again the next day, and reallocating the trade gains into other altcoins, and riding those as well, just using the Fibonacci's and momentum drives. All right, guys, that's it. I'm rambling. God bless you. We'll talk to you soon. None of what I said is financial advice. You've already known that, though, if you've been following this channel. All right, I'm going for real now. Adios. Bye-bye.